All right, let's talk about some of the winners and losers that are finding it difficult to get their relevance right and their customer base satisfied with their product offering. There's also issues around store footprints and how that is managed so that businesses and retailers in particular actually have the right mix of old stores, online, and the offerings that work. One of the biggest winners, obviously, rolling around at the moment is Kmart, particularly its Anko brand. Anybody like me who has children that are constantly growing and wants to buy fashion for them or other bits and pieces, shoes, all the way across to sheets and whatever else. Anko has been really successful and is the highlight of how if you find the right niche and the right quality and the right price, you will build a very strong business that people will identify, even if it is regarded as a sort of cheaper home brand sort of style thing. If you make it well at a good, reasonable price, people will recognize that and they will be loyal to it and they will look for it as a comparable to other more expensive brands. And it has been the most successful thing inside the Kmart business for a long time. If you look at the other side on a loser, Big W is really struggling to stay relevant and compete with the likes of Kmart because their offering is seems a bit stale and needs to be updated again. It is very large store format, which has a lot of offerings, but is it all relevant? And are people willing to saunter through a large store these days to be able to find things, or would they rather do things online and get it delivered? So if you look at the comparables, it's all about that right brand and the precision of that Anko delivery, which Kmart are now and effectively outsourcing into other brands and sending overseas because people can see how reliable it is. It's a volume play, but it's also consistent and people are attracted to it. The other parts of the market that seem to be doing well are electrical and smaller appliances. So JB Hi-Fi, Harvey Norman said they've had a good start to the year. All of those type of players, the good guys, seem to be having strong sales periods because people are spending that money. They're getting more comfortable that the income is sort of going up, interest rates are coming down, they have more capacity to be able to buy those things, and also indicative of the fact that money is being spent to stay at home and have a great time at home rather than going out into hospitality, which is finding it really difficult to attract consistent turnover. And other parts of retail, though, are struggling. Fast fashion is becoming something of the 80s and 90s. So a lot of those, particularly for younger girls, alley fashion. Obviously, there are a few in the US which are even just closing down, like Forever 21 and things like that, are moving away from a store footprint because those models are built on people just wandering past and buying bits and pieces and whatever else. And there's not as much of that going through malls and shopping centers these days. So they're finding it a challenge to be able to stay relevant in that and how they get their delivery to their customer base and build up their loyalty from those people. So who are probably more loyal to online shopping and are willing to look at things online and take the punt on trying them on rather than actually seeing it, touching it, feeling it that way. So each of those parties have different customer bases and how they deliver them is the important thing for them, as well as what capacity and availability there is across each of their product lines. So some people are getting those right, and that's giving them a good performance. Other people are struggling with it, and they're also having to restructure how they deliver and give their customer experience. So places like Country Road are really struggling to maintain a current position against challenges from all the overseas brands who offer similar but obviously more attractive things to the market at the moment and how they continue to position themselves. That's going to be something difficult they're going to have to turn around. I mean, it's another monster loss this year compared to on top of a loss last year. Obviously, there are a lot of other brands that are going through similar issues where they're closing and limiting store footprints and transitioning more to an online presence to be able to maintain their margin and trim down costs. On top of those issues with these winners and losers is trying to maintain staffing levels, keeping the right staff in there to be able to give a customer experience that people want, and also understanding of products and things like that. Obviously, Good Guys and JB Hi-Fi have to have people in there who understand the products and can sell those products to people. That is a challenge that they seem to be getting right at the moment. And then on top of all of these other issues around winners, losers, and transition, secondhand is becoming popular still and growing because people do like to make sure that things are being recycled. And they also like the value aspect of that, particularly as particularly as we get the fire trucks come past. Um, Particularly as in this marketplace, if you are paying for a premium product, it will be expensive. But if you can use it and then pass it on, somebody will still pay a reasonable amount, and you can factor into that into your buying model that you will recover some of your expenditure on that basis, particularly where you've got larger runs of premium goods, let's call them handbags, shoes, and alike, where it may well be an option to share them. Co-ownership might be something that emerges on top of that. The overall thing with the winners and losers is the winners really seem to understand their product offering and they really know how to get to their customer, and their customer is responding on that basis. Whereas the losers seem to be struggling to get that nexus right with their customer to how they're actually going to buy and get wallets and purses open to be able to purchase things. And it's really clear that they need to be better at understanding what their customers want, how they can be better than their competitors, and then making sure that they are consistent with that offering to be able to lock down their customers. Otherwise, people's head will get turned and they will go to alternatives. And that could be the end of a few brands as it again rolls down to loss of relevance, and people are very finicky around some of these things. If a business and a brand cannot maintain its relevance, it inevitably will have to be sold or die. So let's talk about brand relevance as a starting point. So for each brand, you have three main factors that go into your relevance. And it's how you deliver to your customer base that makes it important for those customers to keep coming back to you and show loyalty. So you have your awareness, so people are aware of you, and that is generally done by some marketing or BD, whether it be word of mouth or by a public publicity sort of campaign. That creates an awareness and understanding what your product is, so people understand it and then can make a decision about whether they want to buy. The next part of that is desire, or willingness to, and ability to be able to deliver something that creates desire from people. So if you look at the classic ones of the iPhones, where they've managed to create a really, really valuable asset and a valuable product that people desire to have at a great margin, at a high margin, and they can deliver it at a reasonable size volume as well. Whereas if you go to other aspects, and this is where your higher end brands create a scarcity. And if you have a scarcity, that creates more desire to buy things. Obviously, that also enables you to charge a higher price. So it's a balance between creating the desire at the right price and creating a volume requirement. And then over the top of that is the loyalty. And that comes down to things like customer service and the delivery and the consistency of the delivery, so that your customers understand what they're going to get, they want it, and they know that how they're going to get that, and it's going to be consistent. And things like Amazon, people know what they're going to get from Amazon, so they are loyal to Amazon. They might look at products or whatever else out in the real world and go, oh, I want to buy that, but I will go to Amazon because I know it's easier, it may well be cheaper, and it'll get delivered to my house. So that's part of their relevance and their brand loyalty. The issue at the moment that we're seeing with a lot of brands is that if their relevance is dying off, say for things like Country Road, which used to be for everybody who used to work in the city, Casual Fridays was Country Road Day, everybody be dressed in Country Road and whatever else. But now there are so many other challenger brands that are becoming more relevant that it's making it more difficult for Country Road to hold that position. and it's really struggled to be able to do that transition from being a 80s, 90s brand to being into a modern brand. And it's tried some things. It's tried traditional colours and Aboriginal sort of colours and all of those type of things. But at the moment, it hasn't worked. And they also are finding it challenging with their store footprint about whether that needs to change. It's similar with surf brands where there's multiple challenges and not a lot of delineation between some of those things. But overall, each business need to be really understanding about how their relevance works, how they can maintain their cash flow, and then what they need to do in the future. Otherwise, they could become less relevant or irrelevant and their business would evaporate. In terms of Black Friday, there is now an emerging trend of a conundrum that a lot of brands are finding. Because previously, Black Friday was a great way to be able to generate turnover, and it was the start of um, the preparation for Christmas. So wallets would be opened and people would be buying, and there was genuine desire to just buy stuff. It was not targeted. It was not really anything more than just a real need for people to be involved and participate in it and buying heaps of things on the perception that they were getting a discount. Lots of brands created lines for Black Friday to be able to avoid heavy discounting of their more traditional things and maintain their margins. And it also enabled them to be able to have sufficient stock to be able to work through. And if it didn't sell through, it was maybe at lower quality or not the same level as their store sort of stuff. Now, what's happening is the expectations of customers in Black Friday has materially changed. The expectation is now they will get genuine discount on a genuine product that there is desire for. So going back to the relevance is they desire or want it on the basis of a discount that they perceive is a special thing for Black Friday. That creates a challenge because how do you actually make sure your stock is right for that and ensure that you have enough of it, but so it's scarce enough to create the value and the wallet opening, but there's volume enough to be able to create a real impact on your bottom line. Because a lot of businesses are finding that Black Friday now starts the discount period all the way through to Christmas, so they don't get back to full margin until the following year. And that means is that if you can't get enough volume through and you can't get enough sales in Black Friday, it can be a really challenging time because you've invested money to get stock ready for a volume play in Black Friday. But if it doesn't work because you can't quite get the right product or the pricing slightly off, or there's somebody else who's challenged you, that makes it really, really difficult for some businesses. And that's why it creates a conundrum. Do you invest in stock that you think will sell, or do you hold and just put a smaller investment in on the basis that you're uncertain, and then you can work through your stock in the way through Christmas? The other thing that's happened because of Black Friday is that it's really become a global position. Everybody can buy from everybody across the world. Who would have thought that some challenging people in Sydney can buy on Pret-a-Porter and have it delivered in a week, compared to 20 years ago where they were destination places that you would go when you travel overseas. So now with this global network and being able to buy things in the US, in the UK, or let's not talk about too much Trump tariffs, and that will be a challenge in this Black Friday this year and unique. But overall, it's a global positioning. So local brands really have to be ready to be able to challenge these overseas brands to again stay relevant in that marketplace and also build up their stock at the right level and the right price and get that precision right to be able to make the most of it and drive their working capital through Black Friday and then into the sale roll that happens with Christmas. And that's another factor is margins now become increasingly important for Black Friday and then the next 3 months after that into Christmas. Because although it may be a good volume period, if you're not making enough margin or sufficient margin on it, you can actually create a problem for yourself. And on top of that, you can also create a problem because you might be overstocked. So it really does create this conundrum scenario where you've got to almost have a bit of a bet that you are going to get it right. and that will generate the outcome that you need. If you don't get it right, it creates real uncertainty about the next year, and it will create lockup of working capital because you'll have more stock than what you need. And then you've got to work out how you use that stock or sell it down or dispose of it in different markets. One of the things that I've seen people been doing is looking at stock that they can produce under license into areas where their business might not normally operate, might be in Europe or America, and being able to sell that down with minimal risk because you're outsourcing it and licensing it out. So there's another stream of revenue that you can get, and also potentially using some of that overstock that you might generate to pump through those things rather than damaging your local brand and keeping that desire and relevance and scarcity issue under control. But it's really, this conundrum is going to be an issue going forward as tastes change and people become more and more used to buying things from global providers. I wouldn't be surprised if some of the Chinese providers start even selling more direct, even though we already have those sort of brokerage aspects down here, like Temu and things like that. I wouldn't be surprised if they actually come even further direct and start being able to sell direct to me, and find out all of my details, particularly with all of the ability of AI to be able to identify. And we all know that some miraculous things that we're standing next to the phone, we might mention that we're interested in buying something, and 5 minutes later it pops up as an ad on your feeds or whatever else. So all of these things are going to continue. Everybody needs to be adaptable, and you need to commit to what you're going to do at Black Friday and beyond that. All of that leads to the fact is you need to understand how relevant you are for your customer, and you need to really understand your end user so that you can bring something that will give them value and will give you certainty that they will be interested in buying it. It's hard, but retail, that is the challenge.